Good morning. The big day is here. I can't wait for it to be over. It's back and forth, but we'll see. 2 o'clock, and just looking at the patterns here this morning. I guess everybody's feeling somewhat the same as far as let's wait and see after yesterday's gap up. The markets went higher. They backed off at the end of the day. And they held on to the opening price. Right? That's a positive. They held on to the gap. It's a positive. They really didn't even come down into the first support, which would be right here. And this is one of the ways that we play gaps. Is that it got pretty close as I'm eyeballing it. I'd have to look at it intraday here. But, when you have a gap trade that suggests that it can go higher, and this did enter into what we call a void. One of the ways to play it is wait for it to pull back into the first reference point of what was resistance that should become support. Many look for it to fill the gap. Most of the time it doesn't happen. In a bullish trend, and we have to say that this is a bullish trend, meaning while overall it's in a sideways trend, this move up off of the low was extremely bullish. It was a really powerful move off of the low on, Fed comments of we will entertain, loosening versus the position that they had was, neutral to tightening. And then when it reached resistance, it went sideways. So that bullish going sideways at a prior high, major resistance, rather than pulling back, is bullish. So yesterday's gap up was a continuation of this bullish move. So one of the ways to trade it as an intraday trader is to mark off or be aware of what was the first reference point of resistance. And when it pulls back there, you then look at your 2-minute chart or 5-minute chart, whatever you choose to use, and then you look for a reversal bar, whether that's a bottoming tail bar or, if it's a smaller time frame, it could be several red bars and then a green bar and a reversal. And that's your reference point where buyers should step up. And obviously they did. And then at the end of the day, whenever they backed off a little bit, and actually was a run up into the first half hour, and the markets came in and kind of went nowhere for the most part. So while we've got a topping tail here, because of the bullish move, I like to say, in a sense, we give that topping tail less respect than if it was in a downtrend, right? Something like this, where it was trending down or it had broken some support and then rallies up to resistance and you get a topping tail. Some common sense or just putting together other concepts to say, hey, topping tail is one concept. And a lot of traders see a topping tail on an uptrend and, they start getting concerned and it's going to be a big pullback, whatever. But is it extended or is it in a downtrend? In other words, put the candle in the context of the location and trend, and that'll tell you the potential as to how far that might actually follow through as in a meaningful way, such as the topping tail here. That's, having broken down and then retesting resistance. So new all-time highs aren't that far away. We've got a giant reversal a couple of weeks ago, and markets are waiting to see what's going to happen today. After yesterday's, move by Mr. Draghi as to saying, well, we may lower interest rates. Does that kind of push the Fed's buttons to, to move today? Because the consensus pretty much was they're going to do nothing, and it's a guarantee in July. But do they actually act today? So there's going to be some whip, maybe more so than typical, depending on what is said. But right now, this is a bullish consolidation, a run up, and it's not pulling back to this congestion right here, these overlapping bars. It's just creating a support point. So we'll see. If it gets above here, the assumption is it continues to go higher, but how aggressive are traders going to be this morning, knowing what's coming at 2 o'clock? Well, typically what happens is the markets do move. at the open. And then they run whatever the direction they're going to continue. And based on the hourly chart here, the assumption is they'll continue to run up. They'll test to yesterday's high. Maybe they'll exceed it. They'll see where it goes. And then, by 10:30, 11 o'clock, everybody takes an early lunch to come back to get ready, for the big announcement and whatever is going to happen in the afternoon. So spiders, kind of the same thing. I think a little closer, just eyeballing it to the old highs up there, but very close to making new all-time highs. Backed off a little bit there, but still looking good. Gapping up out of a consolidation is different than gapping up after 5 days running, an excessive amount relative to what's on the chart. So that was a big run in a few days. And then, so this was a gap up, which looked like it was going to come back in, and it actually didn't that day. I mean, it ran higher before it gave up. And then the next day it gapped up even bigger, and that one came in, but overall it didn't follow through to the downside. So bullish price action. And yesterday's gap up came down to, I'll just drag this up here for now, came down to that reference point. As I pointed, you get a gap up, look to the left and see what's immediately there. And that's where you look for the turn on your intraday chart. And sometimes it happens at the first reversal period. Sometimes it happens, in the first 5 or 10 minutes. So we have different guidelines as to how to guide ourselves as to what happens and when. Same pattern here, intraday, going sideways, bullish. So consolidating into the rising 20 MA, getting above here should bring in buyers. Trading below here, since it's in an uptrend, I wouldn't be shorting it. I would actually, if it, just thinking, I always look at this and what if this, then that, So if this was to break down under here, what should happen, it should be a fake out, right? For, I don't see a reason at the moment why this should break under here and continue to go lower. If it did, well, we'll assess that. But see these bottoming tail bars right here? This is what's supposed to happen, meaning as this started to go sideways, if we were looking at a 5-minute chart, it could look something like this. And then as it broke down, it popped right back up again. That's what's supposed to happen in a bullish trend. So uptrend, you see going sideways at a breakdown at that moment, it isn't something to short. It's to, hey, let's see what this actually does here. And then we see bar by bar analysis is, the breakdown turned into a bottoming tail bar, or in a smaller time frame, the breakdown turned into a V bottom and it went right back up again. Oh, it tried to do it again and it came right back up again. And here we got a red bar ignored and it's going sideways. So everything at this moment in time is saying that buyers are just sitting below here, just willing to snap up shares on any even minor dip, not even down to support, just holding at the top of this wide range bar. So based on that, if it clears this should bring in more buyers because that's the essence of a breakout. So we'll just see what happens. And those all-time highs are just sitting up there waiting above, and we'll see how aggressive they want to be. We looked at the Qs, and let's look at the Russell, look at the laggard. So the Russell was able to clear some resistance. It's got more resistance to the left there. And this is the concept. We have the concept of avoid, and we have a concept of, well, where's the next reference point of support? And if it's close at hand, the odds are that you're going to be into some type of choppy price action. And so this chopping here, it got through here, there's more there. So as we look at different stocks to trade or different markets to trade, we look for the ones that, let's just call it clean, meaning it's either further away from the next reference point of resistance or there's nothing there. Those are the ones that have the higher tendency to trend. Now, we've had this news event that's coming that's coming up on us today. And there's obviously going to be some hesitancy of a wait and see. And so that's what we see happening here on the Russell as well. But as we look at different markets, the S&Ps and the Qs were cleaner. But the Russell and the transports, even since last year, have been in the mode of what we call bringing up the rear. And so as we go into today, and let's just say that the markets view whatever comes out at 2 o'clock as being bullish, it's possible that the Russell and the transports may be the place to focus, whereas since the Qs and the spiders are right at those all-time highs, they may just run up into there and may not go very far, whereas the Russell has got some potential to play catch-up. So that would be a consideration. And, the same concept or idea could be applicable to the stocks that you're looking at, whereas maybe they were lagging versus, say, something like Facebook, which has been, moving over the last week or so. It backed off yesterday. But maybe stocks like that have already moved have less potential than the ones that have been lagging. So a consideration. Transports, they couldn't clear this high. So it's kind of the fly in the ointment, so to speak, in the bullish case that the transports are lagging here. So if the markets do start moving higher, keep an eye on these transports to see that, they can at least get above the 200 MA here, and the next resistance isn't that far away, so the expectation isn't that these would have the great opportunity to make a move, but you want to keep an eye on them just from a broader market perspective, because if the markets are moving up to new all-time highs and the transports are just hanging here doing nothing, intermediate term, that's not a good sign, but, the market's moving to new all-time highs is great. And historically, it's happened before. And, so just something to be aware of, that there's just that piece of information out there that isn't supportive of a market being as bullish as it may seem. Just looking at the futures, S&Ps are flat. So just hanging here, waiting. Same pattern there, going sideways. Wide range bar yesterday. So we don't have the gap because this is the futures here, but still very close to the old high. And we'll see if these markets want to move here this morning or whether we're just going to be sitting on our hands here until after 2 o'clock. But you can see this is the third time up here, and prices pulled back to the prior low. And in other words, all we have here right now is a trading range. So as bullish as this was, the markets are in a trading range. And let's assume that the Fed actually cuts interest rates today and does maybe what is somewhat less expected. Well, what else is the market going to have to be bullish on at that point? So I'm just, from my own point of view, what's going to drive this market higher, even if it pushes up above here, because then it goes back to, what about China? Well, they're going to be talking, that's the rhetoric, so on and so forth. But the markets are in a wide, very wide trading range. It's getting a bit tighter here. So keeping the short term in perspective of the long term makes a lot of sense. Qs, same story. Inside the top of the range there, going sideways. Could be opportunity here for day traders in the short term, for markets to push up here above those highs here. And we'll see if they run up here as the market opens. The Dow, same story, same pattern, no matter where we look. And same kind of strong move, bullish price action pop up, really close to those all-time highs up there. And the same thing, it'll be the third time pushing up, trying to get through 27,000 for the futures. Bonds are down here a bit, and that's a plus. And we'll see how much more they come in. They're up in this resistance area right over here. So some profit taking, and we'll see if how much this comes in here. The markets would like that because that means interest rates are going higher as this comes down, and then alleviates the concerns of the inversion and recession and so on. And if oil, which had a decent day yesterday, can start pushing up past this 55 level, that'd be another positive for the market. So as we look at, the transports being a laggard and what are they possibly doing here, just like we look at trading concepts, meaning support, resistance, candles, bar by bar, so on and so forth, we don't just rely on one. So if the transports are lagging and oil is moving up and interest rates are moving up, that kind of neutralizes the transports. And, so one or the other probably catches up in either direction. And so that leads, there are times where not everything is aligned perfectly, and where the historical parts where they were, and markets tend to be more of what we call a no-brainer, where things aren't perfectly aligned. We just take that note and take the weight of the evidence and say, overall, this is bullish or this is bearish, and we go with that. Perfection is a hard thing to come by. Right? Gold, I think just waiting here for the next shoe to drop to see, are they going to lower interest rates? The inflation concerns, the dollar has been, it started to break lower, then it moved back up again, and it's kind of neutral. So more wait and see, no matter where we look here. But, mostly positives, some negatives, and even, the concern of the semiconductors, right? They came back strong yesterday. They didn't clear that resistance, but, the China concerns, and they had a drag on here. So there's a lot of things to keep an eye on. And with all that being said, there's, a lot of stocks that are doing some great things. You can see, Adobe come back to life here on earnings, breaking out above the highs here. So there's lots of positives. There's really nothing to be getting very bearish about on this market. It's just more of a, bullish to neutral type of scenario, and a good, I guess, a better time for stock pickers, and, rather than throwing a dart and being able to, make money just by, throwing some money at the market. So we'll sit here, we'll see what the open brings us, and we'll all know what happens at 2 o'clock and what the reaction is. So that's it for me. All yours, Nan.
All right, good morning. Thank you. All right, let's look at opens real quick. Weekly options trader. We have 1, 2, 3, 4, 5 bullish put spreads. Lift closed with a nice 1, 2, 3. Opening up a few pennies, looks great. Delta put spread for Friday. Greg's Coffee Shop for Friday looks great. Mohawk put spread Friday. I tightened the stop, which will lock in a profit. Amgen we entered yesterday, which is actually the following week. And that looks great. We sold a put spread under the lows. And that's what we do. I mean, that's our total methodical approach. Get a bullish pattern, sell a put under support, and, make time decay, plus get paid if it goes in the right direction. We're also long stock lift in the swing and options trader, and we have a put spread, AVY. We bought yesterday over the 5-minute high. Kim, it's a core trade. Beautiful weekly, monthly breakout. Cody, long stock. It looks great to add over the Monday's high. AIG, long stock, looks great. Papa Mike, we have a covered put, which is short stock, and short puts, opposite of a covered call. We're long stock, Delta. FND long stock with a trailing stop. Roku, we have a covered call. I stopped out of the put spread for the weekly options trader because look at that deep retracement yesterday. Look at this. It wasn't acting right. No, but we're still in the swing trader. Aries, long stock with a trailing stop. CNF, long stock, looks great. Mohawk, covered call. Coffee shop, covered call. Triple W, short stock. It held the stop yesterday. Same with BBBY. Even with the bounce, it held the stop. Finally, Travelers, covered call. All right, that's it. So we have no problems on our hand. We've got a pretty big inventory. You all have to trade your own trading plan into FOMC, but we're going to manage them the way we have them posted. All right, gappers here. ENR, nasty gap breakdown here. But it's kind of excessive and it's falling right now, but that's a definite short watch. Kura, 1745, bearish gap at the support. These were all yours, McGraw. Let me come back to those. Let me do the gappers first. YY, 73 and change, gap in the support. Now remember, I go through these fast because I'm just looking for tier ones. Tier ones meaning the gap's either bullish or bearish, not excessive. Bullish pre-market. 29.71, it's too excessive. Just keep moving. Rio, 60 bucks. Bearish gap here, it's an ADR, but McGraw, remember you asked me about something yesterday as a condor? I'm like, no, it's in an uptrend. But now with this bearish gap here, if this like doesn't do anything in the first 30 minutes, this is a condor now. If it can't bounce, if it's, you know, stays here, then now we have overhead resistance. You could do the 62s. You got support here, you know, 58, 57, and lower. MTSI, 1360. It's a bearish gap, and it's not excessive. So that's not bad. That's not bad. Let's see how it sets up. X. Right on this day, I posted it in the letter as a bullish watch here. You know, it got extended, rallied up, went sideways. Now we have a higher low. Now it's gapping up, 15 bucks. That is a definite put spread candidate. I'm going to put that on that 5-minute chart. Fred. Wow. Remember we say things look like they're on a death trend, and we might say it when it's 5 bucks or whatever bucks. Look at this, 37 cents. Fred looks like he's going out of business. All right, Hog. All right, I'm into yesterday's now. Oh, no, or some of these had news. Never mind. LUV had something with news. Let me go back to that. Gapping up 52.35. No pattern. So see, I'm like just not interested. ENR we already looked at. BKS had earnings. It's doing nothing. Winnebago had earnings, 37.80. Gap down 50% into this bar, nothing to do. Lazy Boy, 28 bucks. Very bearish gap, but it's too big for me. Jable, 28 bucks. McGraw, you mentioned that one. I like the gap on Jable, so that's 30-minute high. Adobe, 288. That's a bullish gap. Let's watch that on a pullback. I'm putting that in this window. Looks great. McGraw, here's your Kern. You said it was a pot stock, so I got to add that to my pot list. Look at this launch. All right, let me put it on my list right now. I'm trusting you. That's going on my pot. G Golf. This came from you, McGraw. Now, see, I answered you. I don't like this. Is whip, 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 whip. This will give you a headache. But yesterday had a beautiful close. Beautiful. Daily, weekly, monthly. it's not tradable at all here until now. So that's worth watching. Starbucks is a 1, 2, 3. Maybe, you know, it's still in an uptrend, of course, but it got extended. But maybe a Friday call spread. Zion, I like the 2-bar reversal with a price void above. Hilton, I like that. That's a beautiful breakout. That looks beautiful, all time frames. That's tier 1. It's not a gapper, but it's beautiful. I'm putting that in a window. You got a nice 15-minute close, LYB. It's going sideways, but it's fine. TLT, I'm watching for a call spread. Stoled was up yesterday on volume from a, you know, multi-week base. That's put spread and looks higher. SEDG run was another solar play that I'm watching. SPWR, wow, we sold at $11 yesterday, or $10.98. We top ticked this. Beyond, I mean, I texted Greg at the gym. I was on the Stairmaster, and then I saw this ticker going by, the Beyond's big old gap. It was then flat on the day. And I'm like, oh man, I can't. I said in the morning, we're getting close on selling a call spread on Beyond. And so I looked at the calls this morning, and wow, they're still crazy jacked up juice for Friday. So that is on my list for a call spread. Charlie Foxtrot, I need a pullback. WTR. It has to get over the highs as a 1, 2, 3. Pod, we're watching on a pullback. Oh, Chris, you asked about Fiverr, and I said it's a mess. Here, look at the daily. These are wide, uncontrolled, whippy bars.